Hey, what's going on, everyone? It's your boy Sal in the building. Thank you for joining me. This is part 2 of my Learning to Trade Options series. If you haven't seen part 1, you don't know anything about options, please visit part 1 first before you watch this video. All right, with that being said, thank you for everybody who's watched my videos. Click subscribe if this is your first time. Let's get straight into it. So we talked a lot about in part 1 about volatility and what goes into options pricing. Now what we know, we got the basics of buying options. Let's go ahead and actually buy your first option. So we're going to get straight into it. And one of the most important things, and I stressed this especially in part 1, was volatility. And implied volatility especially is by far one of the most important things to look for in trading options. All right, implied volatility is the estimated volatility of a security's price. In general, implied volatility increases when the market is bearish, when investors believe that the asset's price will decline over time, and decreases when the market is bullish, when investors believe that the price will rise over time. So basically what this is all saying is that implied volatility measure supply and demand. I mean, that's basically what this is saying. And investors' expectation of the market's, of that stock's ability to either rise or decrease in price. All right. So you want to look for solid implied volatility in the direction that you believe that the mark of that particular stock is going to go to. All right. So if you're buying a stock to go long, you're looking for low implied volatility. If you're looking for a stock to go down, you're looking for high implied volatility. But there are many other things that go into that, and we're going to see why. So now that we know that, you're like, okay, so how do I find stocks that have the implied volatility that I'm looking for in the direction that I expect? So there are many resources for that, and there are websites that charge $50, $60, $100. You don't need to do any of that. There's an incredible free service called barchart.com. And let me spread the screen out so you can see a little bit better. There you go. Barchart.com offers an implied volatility screener. Now, I think Yahoo does as well. I'm not sure, but barchart.com offers an incredible resource. This is very expensive data here, folks. And as we look at these charts, it looks very much like an option chain, almost. You get your symbols here, you get your price, type of option, call or put, strike, expiration date, all right, DTE, which means for date till expiration, very important, your bid, how much people are looking to buy the option for, the midpoint between the bid and the ask, how much sellers are asking buyers to pay, the last transaction price in that option, and the current volume in that option. All right. I believe this is updated nightly, but I've been on the site, for a while, and I've already seen it kind of refresh itself. So it may even be live. I mean, how good of a job, and it may do that while we're paying attention to it. Volume, as I just mentioned, open interest, how many contracts are already existing on the particular option, and our most important thing, implied volatility. All right, implied volatility. So let's take a look at the different settings here we have here on implied volatility as we see different levels of it. And as you can see here in just a moment, as it processes all this information, low implied volatility, very bullish. And if you notice, these are very bullish stocks right now, right? These are very low volatility stocks, but very bullish stocks. But you got to be very careful about it because many of them have already expired, right? There was high, expectation for these stocks, right? High expectations, but as you can see, many of them were pretty far, or actually, some very close to their strike prices, and have expired now because the time value has ran out. So very low bids, very low ask as well. So we want to pay very close attention to expiration date and date till expiration, because we talked about how in part 1 the time value plays a very critical part. You know what I'm saying? Time value plays a very critical part in the value of your option. So you want to make sure you have a lot of time to work with. So we also have to make sure, if we're looking at implied volatility, that we still have solid volume. For example, let's look at some bearish high implied volatility. All right, so these are stocks that people expect to do very poorly, and these are stocks that have been doing very poorly. Sprint, Rite Aid, DVAX is, I know it's a biotech company off the top of my head. Snap, Sears, SHLD. All right, so Alibaba has actually been doing pretty well, but these are bearish. These are stocks that have very high implied volatility, so the market expects these to do very poorly. Some have already expired, but as you can see here, you've still got to pay attention to what on this chart? Volume. All right, as you can see here, look at these wide bid-ask spreads here. All right, when you get into options that are very illiquid, and I talked about that a little bit in part one, you want to make sure, you playing options that have liquidity. That's probably 1, 2, right? Volume and then implied volatility when we're talking about the importance, of what to look for when going into options. So at the end of the day, let's go back and look at volume. All right, because that's still the most important thing. So let's go ahead and look up volume here. And as you can see here, all right, now we're looking at volume, what the market is excited about right now. And as you can see here, Bank of America, all right, almost 136,000, all right, contracts being written on this Bank of America option at $24. So there's the strike price. This is an in the money option, right? So it's 24.21. It is above the strike price, so it's in the money. All right. This is a very solid float, only a penny between the bid and the ask. So very, very solid spread there. All right. But I don't like the fact that I only got 5 days to expiration. So if we have a very bad day in the week, that's time value lost. And that might put us, beneath the strike price. And now we've really lost money. All right. So let's keep going down the list here. Here's an Apple opportunity that's already expired. AMD, let's look at AMD. AMD $13.92. There's a call option. We're seeing here a $17 strike price. It gives us an August 18th, 2017 expiration. So we got 33 days until expiration. As much as I like this option, I don't like the fact that we're still almost $2 and some change away from the strike price, from being in the money. All right. Now, if I didn't care about being in the money, I'd look for more time on this. But I want to be in the money. But I think I can get both ways, getting in the money and being able to have exceptional, time expiration that allows me to benefit off some great news that may come out. Where do we get that opportunity? Wow, let's look one more down. AMD, $13.92 is the underlying going for $15 strike price. So we got 2 days. We got $2 lower. September 15th. All right, September 15th on this option. We get 61 days. We get an extra 31 days, and we get $2 lower on the strike price. It's going for $1.12, so we are paying a little bit more in premium. 37,000 current or volume on the option that day, which is this past Friday. Open interest, solid open interest. All right, solid open interest. So we got a lot of momentum that's just kind of coming into the play here. Implied volatility is lower. Implied volatility is lower than the option that, gives us 30 days less and $2 higher in the strike price. So this is where we want to be. We want to be right here. This is a beautiful opportunity for you to take advantage of right here. So let's do some research real quick on why people are so excited about this. So we can look at current news about AMD, but we're in earnings season. So I have a feeling that earnings are relatively close for AMD. So I'm going to go to one of my favorite websites, and I'm going to take you guys there as well, marketbeat.com. All right, let's go and look at this side of the website. So we're going to scroll up. You're going to go to marketbeat.com. You're going to type in AMD, the ticker. And then you're going to go to earnings history. You're going to click that tab, earnings history. All right. And as you can see here, AMD's kind of turned around here recently. These last few periods been so-so. They've met expectations, right? They've met expectations on earnings. So let's scroll down and boom, look at this. Next earnings is July 25th. Now, you're going to have to make sure you verify that, right? Every time you get information, especially when we talk about projections, you want to go ahead and verify that on NASDAQ.com or even the company's own website, or simply by sending them an email to the Investors Relations Department. But this website is saying September 25th. I'm going to go with that for today's example. That's pretty good. So people are excited about the fact that they can get into the option today, and then when earnings is released, this stock can maybe do some incredible things for traders who've already been in the stock. So this gets me really excited to look at that. So let's go back to our chart on implied volatility. So we're like, okay, we like that. We like that opportunity. We're going to write it down, right? Dr. Alexander Elder talks about in his book, Welcome to My Trading Room, or Come Into My Trading Room, rather, that you want to be an active record keeper as a trader. So you're going to write it down, all right? Don't copy and paste. Write it down. Today is July 16th. You looked at the AMD $15 call for September 15th when AMD was trading at $13.92. All right. And this particular option is costing us $1.14. Right now, that is the current ask. All right. Boom. So we like it. We've written it down. By the way, every trader should have a trader's notebook. All right. Should have dozens of your previous trades, mindset about it, prices when you looked at them, stuff like that. All right. A lot of guys like to keep it in a PDF form. Right? Write it down. All right. Then when you get the money, you have somebody put it in the computer for you. How about that? Do it that way. All right. So we've written it down. Let's do some research on it. We found out that the fact that, okay, earnings are coming out. We're excited about it. Now let's see what the potential profit for this is, for this opportunity is. So let's go and take a look at the potential profit. So we're going to look at a website called Options Profit Calculator. Let me put it on the screen so you got a good look at it. Options Profit Calculator. And again, I'll put this in the description. You're going to go and look at the long call, right? So we're going to calculate what's going to happen on a long call for this stock. I'm going to click long call. All right. And we're going to go ahead and put in AMD. Right? It's going to get the price for us. It's the $13.92. We are buying this option. We're not writing. We've selected the September 15th, $15 call. You would click this button. I've already selected it. Price of the option is $1.14. Make sure you put in the correct one here, because sometimes Option Profit Calculator will pick up, you know, something on level 2 that's pretty insane. So make sure you're putting in the right one that's what it's going for right now, and it's going for $1.14. All right, we got some money to work with, but we don't want to be greedy, so I put in 10 contracts. All right, it's only at $1.14, so one option would actually cost us $1.14. But we got some money to work with, so we don't want to be greedy. You know, we want to put in a reasonable amount, so we're going to put in 10 contracts. Right? No trade should make you or break you. Right? So you never want to go in too big, too heavy, because tomorrow is another day. All right, and we're going to add some more outputs to this. All right. The price range for this calculation, I want to see what it says up to $17. All right, because again, we've got over 60 days left on this option, so this stock can really go with this sentiment. Let's just say we're going to go, you know, $14 from here. All right, no, we're going to go $4 from here. Excuse me, we're at $12.92. Let's go $18. Let's go 18 to be safe. 18 bucks. All right, we kill earnings. Let's go ahead and calculate what the potential return for this is. All right, so these are the potential returns. All right, dollar value of our potential profit and loss if this does well. This is a very good looking chart. I like this. I like the way this looks. All right, so we're at $13.92 now. Options, let's say earnings comes out, we get a $3 move. All right, by the time earnings comes out, which is almost a week and a half away, let's say we're in the money now. We're slightly just out the money. We're at $14.80. All right, we're at $14.80. Just to keep things reasonable. we're at 14.80. All right. Or if you want to say, oh, Sal, you're being a little bit greedy on that. Well, we're not going to be $1 up in a week and a half. All right, let's just go back a little bit further back then. All right, let's just say we're at $14. All right, earnings comes out, we're at $14. Earnings release, and boom, we get a $3 move in earnings. All right, we get a $3 move the day of earnings. And that's being said that we don't go anywhere from here. All right, we don't go anywhere because right now the stock is at $13.92. Let's say we don't go anywhere from here. All right, so we're at $13.92. Let's say we're probably, you know, it's July 24th. All right, 27th. All right, we're 10 days from now because I'm recording this July 26th. We're at $13.80. The stock's actually gone down. We're $140, as you can see by my screen, in the hole. All right, earnings comes out. Boom, we get a $3 to $4 move. All right, so that'll be $16.80. Let's go to $16.80. What happens? Look at that. Our earnings, our great news of earnings has turned our loss into an incredible gain. Now, let's say this is July 27th. Earnings has come out. $16.80 is where we are. And we are up $1,600 on our $1,100 investment. That, ladies and gentlemen, is the power of options. We are in the money. We're deep in the money. And we've got over a month left to go. We've got over a month left to go. Now, let's say this keeps going. All right, we let our profits run. We get up to $17.80. $17.80, let's say by August 17th. Let's scroll up a little bit. August 17th, $17.80. Let's look at it. Oh, my God. We're at almost $2,000. We're at almost $2,000. We're up over 100% on our $1,100. We're up over 100%, excuse me, on our $1,100 investment. You know, this is the power of options, folks. And this is why you always want to look at your potential profit, but you can't be greedy. You also got to look at your potential loss, right? If this goes against you, right? This goes against you over the corresponding couple of days, and you know what your loss could look like. All right. But because you were a smart trader and gave yourself a lot of time, you gave yourself the opportunity to be able to get out of this hole. Right? You gave yourself the opportunity to get out of this hole. That's the most important thing. You know? So let's go back now to our platform because we're ready to buy this thing. We're excited. We think this can go really, really high. We're excited about this option now. Let's go take a look at what we got to do to buy it. All right? So now we're going to go to our platform, whatever platform it is you use. You're going to go to AMD. All right. Pulling up the chart. Expiration. And for this example, I'm using Charles Schwab. All right. Unselect all. You're looking for the September 15th. Click continue. All right. Here's September 15th. 61 days till expiration. $15 option. All right. $15 option. $1.14 is what it's going for. Let's click on it. As you can see, people are buying it up. They're loving it right now. All right. So here we are. And oh, man, did you guys see that? Look at the opportunity we had here. 52-week low was 11 cents. And now here we are buying it at $1.14. All right. So somebody's already up almost 1,000% on their money on this AMD call. Somebody who was very, very intelligent is up over 1,000%. Oh, missed opportunity. That's why I love posting these things on my Twitter account. Follow me on Twitter, by the way. So here we have, again, 61 days left to expiration. So a lot of opportunity there. But let's do some real quick research on the potential of this play here. All right. We're going to do some real quick research. So here's AMD. All right. The 1 week chart looks really, really nice. It's respecting our moving averages. All right. I've already marked here potential opportunities here. Here's our $15 that we want to break. All right. We are so close to breaking this $15 wall, which has been some resistance here. Again, I'm looking at a weekly chart, right? Let's look at a monthly chart to see where we are. All right. Here's this. There it is, ladies and gentlemen. This is what makes this an excellent trade. We touched it. We failed it. We're heading back. and we're going to break through it this time. And the catalyst is going to be earnings. Earnings is going to send AMD above, and we're going to make a huge profit on the opportunity to buy AMDs right now on this option below the money and sell it at or above in the money when earnings comes out. All right, now let's get back to our platform. And we've already set things up. We're going to make it at $1.14. It's going to be a limit order. This is a day order. I'm actually going to put good till canceled because I want the stock. I don't, I hope I get it on Monday. But with that being said, we're not sure, the market might be so hot. We don't know if we're going to be able to get filled at 114. We might open up at 120 because there's so much demand. And if that being the case, we're going to have to come back in here and, buy, at a higher price. All right. And then we go ahead and pressing review order to buy. But I don't want you guys looking at my trading account. So we're going to keep it like this. So I really hope you guys have enjoyed my training today. Thank you so much for watching my channel. I hope you've learned a lot. The 2 resources will be in the description. If you can do me a favor, go ahead and donate to the page. I'll just buy more books to learn and to learn and grow my knowledge, and then give it back to you guys and people who are watching this in the future. So with that being said, until next time, folks, take care.